Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Crude oil continues to display a choppy price action as the future supply and demand outlook remains mixed. More recently, though, the market started to have more tailwinds than headwinds as the supply and demand drivers aligned. In fact, on the supply side, the tensions in the Red Sea are still present, and the recent escalation with the US and UK striking Houthis targets in Yemen is keeping supply fears high. On the demand side, the recent economic data has been showing a reacceleration in activity, which is supported by the rate cuts expectations. Until the music stops, we should continue to see bids coming in the oil market, with the natural target standing around the 80 level. Now, on the daily chart, we can see that crude oil recently broke above this key trend line, but instead of rallying strongly into the next resistance, the price started to range with a slightly bullish tilt. Given the current tailwinds, we should see the price reach at least the 76.20 level and after a breakout, the 80 handle. The sellers, on the other hand, will likely step in around those levels to position for a drop into the 64 support. On the 4-hour chart, we can see that the price recently pulled back and bounced from this upward trend line, where we had also the 61.8% Fibonacci retracement level for confluence. The buyer stepped in with a defined risk below the trend line to position for a rally into the 76.20 level. The sellers, on the other hand, will want to see the price breaking below this trend line to pile in and target the major trend line before looking for a continuation into the 64 support. On the 1-hour chart, we can see that we have this counter trend line where the sellers have been leaning onto to position for a breakout below the upward trend line. The buyers should increase the bullish bets into the 76.20 level with this breakout. Conversely, if the breakout were to fail with the price breaking below this upward trend line, the bullish setup would be invalidated and the sellers will regain control. Today, the main event will be the US PMIs, as the market will want to see how business activity has fared in January after some worrying data from regional surveys. Tomorrow, we have the advanced US Q4 GDP and the latest US jobless claims figures. Finally, on Friday, we conclude the week with the US PCE report. Weak data is likely to weigh on crude oil, while strong figures should keep on supporting the market.